Are we seeing the end of globalization, Patrick?
I think I think we are. I think that the trade tensions are getting higher. I think that actually, I even think it seems to me that the anger point right now seems to be around the export of Chinese EVs because
So, what is going on in China based on your
I
research?
mean, there's a massive slowdown in China, and the Chinese government obviously claimed that that's not the case, but it's very obvious, and it's very tied to real estate, and really, looks an awful lot like Japan in the late 1980s right now.
We're speaking now with Patrick Boyle. He is a professor of finance at King's College London and Queen Mary University. He's a financial author and a prominent YouTuber as well. So he's got a big channel. I'm a big fan of your channel, Patrick. I've been following your work basically since last year. So very pleased to welcome you to the show. People should check out his channel linked below for some great education on finance and economics. So welcome.
Thank you very much for having me on.
You have an interesting background. Why don't you spend a minute to tell the audience a little bit about yourself and how you got to this point in your career?
Sure. Most of my career has been in the hedge fund industry. So I started in private banking in the 1990s. By 2001, I went to work with Victor Niederhofer, who was a well-known hedge fund manager in Connecticut. And so I worked there for about 3 or 4 years and then went to do a master's degree in London and ended up staying in the UK afterwards. And so I worked at a number of investment banks, always in the sort of proprietary trading division. Worked at Millennium, which is one of the bigger hedge funds. And when in about 2012 or so, launched my own fund that was called Palomar, a business that I ran up until around 2020. Then I sold that business, stayed on as a director for a little while, and now I pretty much teach. I started teaching back, I guess, in around 2009. Always sort of like evening classes and that kind of thing, and that's become sort of my main activity now, as well as occasionally putting up videos on YouTube. So.
Occasionally, you do. I think you do quite well for yourself on YouTube. I would like to ask you a few questions about media towards the end, but let's talk about the economy first. I like your channel because you cover the global economy, not just Europe where you're based, not just the US where most of my audience is based, but you have a global perspective. But let's start with the US. The Fed is expected to cut rates this year. Are they cutting into a soft landing or hard landing, do you think? Where do you stand on this debate?
Well, at the moment, it does just look like a soft landing. I mean, you know, there's nothing really obviously breaking in the US economy such that they desperately have to cut. There's not a spike in unemployment. There's not, huge real estate defaults or anything like that. Probably the worst sector in the US right now is commercial real estate. And I think if there's one thing that kind of is breaking, it's that. And obviously that business probably desperately needs lower interest rates. But beyond that, you look around and I think, there isn't any real economic catastrophes going on. So.
I think people are wondering what the market is going to do or how the markets will react to a Fed pivot. Keep in mind, we haven't had one in several years. Historically speaking, Patrick, have Fed pivots been bullish or negative or bearish events for equity markets?
Well, historically, in particular well, really everywhere, as interest rates go down, asset prices go up. And that's just simply if you think through like a DCF model where distant cash flows have been discounted, and the lower the rate you discount them at, the better better the valuation you come up with it. So you'll see things like real estate, you'll see stock prices, all sorts of things rise when rates go down. Now, there's a few little angles to that because sometimes the whole reason that rates are being cut is because something's gone horribly wrong in the economy. And so essentially it's, kind of like after events like September 11th or after the financial crisis in '08 and that sort of thing, where you see rates being cut very aggressively. It's because there's a big problem that needs to be fixed. But historically, asset prices have performed better when rates are going down than when they're going up. Outside the US, like if you look in the UK, basically all of the returns of the FTSE 100 over the last 100 years have occurred during periods of interest rates being cut. During interest rate hike periods, the market tends to go sideways in many other countries.
Are you expecting bond yields to fall then, along with the Fed funds rate declining?
Yeah, I mean, that's what would be expected. It's essentially when rates go down, it's less attractive to have your money in earning that lower interest rate, and so people tend to be pushed to taking more risks.
What is the relationship between yields and stocks? I mean, are they generally correlated positively or negatively? I know there's been periods where they've done both and
It's
they've
interesting.
diverged.
It's
Yeah,
flipped back and forth. Like at the start of my career, back in the early 2000s, we used to almost think of them as exact opposites. If being short the bond was the same as being long stocks, kind of thing.
right.
While that relationship really broke down a lot over the last probably 15 years or so. So the relationship isn't awfully tight at the moment.
Before we continue with the interview, I'm going to tell you about another way you can invest your Bitcoins and store them safely instead of using a traditional wallet or an exchange. Consider an IRA. Today's sponsor, iTrust Capital, is one such IRA that offers 35 crypto assets and the lowest trading fees in the crypto IRA space at 1% only. And being an IRA, it also offers unique tax benefits. If you'd like to get started and learn more, click on itrust.capital/David in the link down below or scan the QR code up here. If you're over 18 and you want to open a new account with cash or roll over an existing account, you can do so using my referral link. And if you use that referral link, you'll get $100 in signing bonuses. How would you allocate a portfolio today if you were still running a fund?
I would probably allocate more into value stocks than growth stocks at this moment. I tend to always be bullish stocks, and that's just quite simply because stocks do tend to rise. And often, I've seen people and people always sort of cut at the lows and add at the highs, the opposite of what they're meant to do. In fact, there's a great book by Jack Schwager called Market Sense and Nonsense, where he looks at people putting money in and out of investment funds, and they always underperform the funds that they're investing in. And the reason for that is they wait till the fund is done really well, they put money in, and then if the fund has a couple of bad months or a bad year, they take all of their money out. And so their adds and cuts mean that their trading actually makes the return of a good investment bad. And so the real risk for individual investors, especially if you're a long-term investor, is if you say that you're going to take your money into cash right now, the real question is when will you reallocate it? And you have to remember that once things get bad, it always looks like they'll get worse. Like if you sat on a trading desk in 2008, when I remember the S&P going to 666, a rather memorable number. And at the time, the guys on the desk were joking that it'll be called the S&P 500 because it's trading at 500 shortly. And the thing is that when things look bad, they look like they can get worse. So it's very difficult for people, even if they're right to cut, to move to cash at a certain level, that they need to have a rule to get back in, which often people struggle with. And I've seen it so many times that people move to cash, the market dips, but not as much as they expected. And then it rallies, rallies, rallies. And sort of 20 years later, they're still grumbling about stock prices and telling you about their gold ETF. So
How do you find value in today's environment where the big indices are driven by a concentration of large tech stocks, which a lot of people think are frothy in valuations today? So, you know,
yeah, I mean, if you look at the S&P 500 and strip out that, I know it's about 27% technology right now. If you look at it without those stocks, the market has not really moved that much since the financial crisis, and similarly, European and British stocks, for example. So there is there are good businesses around the world that you can invest in that are not necessarily technology stocks. And there's also, even if you think if technology appeals to you, a few years ago, I was talking with a friend who was very bullish on EVs and Tesla in particular. And I said to him, well, the thing is that Tesla's awfully expensive. And if you think that the EV industry is going to explode, maybe you'd be better investing in all of the component makers that feed into EVs rather than the kind of maybe more bubbly stocks, where if there is a huge sale in these vehicles, you can benefit from it. But if there's a, if it turns sour, you've got investments in maybe if the stock is cheaper to begin with, it's going to probably fall a lot less. So.
You cover a lot about the European economy as well on your channel. Let's talk about Europe right now. We're speaking ahead of a Bank of England meeting this Thursday, and well, it's actually a busy week for central banks outside of Europe. The Bank of Japan is meeting later this week as well, and of course, the Fed on Wednesday. What are your expectations for the Bank of England? They've already cut rates earlier in the summer. Is that going to continue, you think?
I think that the likelihood of rate cuts in the UK is reasonably high just because the average Brit is probably a lot more squeezed than the average American is, and that's the nature of the way mortgages in the UK work, where basically everyone you can't get a 30-year fixed rate mortgage like you can in the United States. So people lock for 2 or 5 years, and essentially, as rates go up like they did, an awful lot of people, their mortgage payment doubles or triples, and so there's a lot of pain amongst homeowners in the UK right now, and I think that that the central bank probably recognizes that. So.
The inflation rate in the UK has come down considerably since a year and a half ago. Could that be attributed to monetary policy mostly?
It'll be a mix of monetary policy. It's also energy prices as well. Like a lot of
Okay.
what was going on related to energy prices. So,
Are you at all concerned about escalating tensions, perhaps in the Ukraine war? Could that affect energy prices further for Europeans
um,
and British? Yeah.
it could. It's a very interesting thing because essentially a lot of the sanctions and so on that are in place seem to largely being broken right now. We're seeing, if you look at most European countries, they've seen huge growth in their exports to every country that's right next to Russia, and if you look at the charts, they're sort of like no exports and massive exports. And and equally Greek shipping tycoons have essentially sold lots of uh, oil tankers and so on to the Russians. So um, the severity of any sort of shock is muted by that. But equally, I think there are interesting things, even relating to the upcoming election in the United States, where one of the big differences between the two candidates is their view on the conflict in Ukraine. So.
Let's talk about the elections now. It's been discussed by pundits that perhaps both candidates would be bearish for markets for several reasons. Trump, on the Trump side, tariffs are generally perceived as being risk off. On the Harris side, she wants to implement higher corporate taxes. Of course, stocks don't like that. What do you think? Is there any chance that these assumptions are wrong and we're going to get a sustained bull rally?
It is interesting. It's very difficult to know what either of them will do. There's a fellow, I think Robert Armstrong's his name, at the FT, who's written about this, and he argues that while elections can be quite predictable, they're out. The policies are way less predictable. And when we look at the two U.S. candidates, Trump is famously mercurial. Like just because he says something doesn't mean that he will necessarily do it. A good example was when he was in office, he was very much in favor of banning TikTok, and now he's very much in favor of not doing that, possibly tied to some campaign contributions he's received. We've got both candidates who a few years ago would have been very against cryptocurrencies who are now on side for that. We've got, on Trump is just difficult to read because I think he doesn't necessarily know what he'll do next. I think he kind of shoots from the hip. Kamala, on the other hand, is maybe even more of an enigma because she hasn't gone through the primaries like many candidates do. And, we've seen sort of one interview of her. It's very difficult to know whether it's sort of a continuation of Biden policies or whether we'll have a whole new outlook.
Let's turn over to some of the videos that you've done. You talked about tech layoffs and well, the labor market in general, but focusing on the tech sector. What's been driving tech layoffs? I know that there was a big sort of long period where tech hiring was slow in 2022, coinciding with the stock market crash. Have things improved since 2022?
It doesn't appear so. It would appear that the layoffs, are continuing at a much less so than they were a year or two ago. But many of these tech firms, they also did just overhire on a huge scale during the sort of very low interest rate environment, or even just during the kind of tech bubble during COVID. They were involved in all sorts of moonshot projects, where they essentially were getting money for free from investors, and they could sort of take these low probability but potentially large return projects on. And essentially, investors have lost interest in an awful lot of that, the metaverse and all of this kind of thing. People have moved on from. And so the tech firms are focusing on essentially sticking to their knitting with the profitable businesses they run. Most of them are really, at least a lot of them are kind of advertising businesses one way or another. And it's probably a good time, a US election is a good time for selling advertising anyhow. And I think that a lot of the layoffs that we've seen, they related to huge overhiring more than anything else.
Switching gears now to China. Have you looked into the Chinese economy of late? There's been a lot of headlines coming out of the mainstream news, negative headlines, mostly about the slowdown there. The unemployment rate, especially amongst the youth, have has skyrocketed to such an extent that I think they've been, trying to hide some of these numbers under the rug.
Yeah.
Um, and yeah, the young people coming out of schools are finding it very difficult to find jobs. We're seeing a slowdown, perhaps reflected in commodity prices, where copper, tin, steel, they've all fallen from their highs earlier this year. Um, have, and of course, the real estate collapse in China has sparked concern worldwide. So, what is going on in China based on your
I
research?
mean, there's a massive slowdown in China, and the Chinese government obviously claimed that that's not the case, but it's very obvious, and it's very tied to real estate. Probably actually one of the things that really made my channel grow was covering the Evergrande crisis a number of years back, and the real estate problem in China is huge. The biggest problem they have is a lack of consumption. But even on the topic of, are there any obvious signs of the slowdown? Teaching at a university for the longest time, we had a huge number of international students, in particular, coming from China. The number of Chinese students studying abroad at this point has really, really dried up. And some of that relates to visa changes and that sort of thing. But a big part of it is just that the economy has slowed, and people are less willing to invest in themselves, and to spend money on an education that might grow their career. Um, the biggest problem for China, and it's a growing problem, is that the country is essentially trying to export their way out of problems, or they're trying to export their way to growth. but the problem is that they're already by far the biggest exporter in the world, and to step that up even further just brings about all of these trade tensions that we're seeing, where Europe and the United States are talking about tariffs and other trade measures. um, we look at that, and the problem is that China does need to do something to boost domestic consumption, but they're really, really unwilling to do that. And even to do that, to get to a normal level of consumption in China would take decades. It's a very difficult situation, and I think the policymakers there are very aware of it. They seem to have the right ideas, but they seem to be sort of paralyzed and not executing upon it. And over time, China does need to make significant changes that and really, looks an awful lot like Japan in the late 1980s right now, but with significantly more debt and with significantly more malinvestment and so on. Their argument is that somehow technology, the investment that they've made will lead to, kind of a massive growth in productivity, but it doesn't seem likely at all. So.
There is also the issue of a population decline projected into the future. Would that just be a sign of a maturing economy when population growth is slower, or would that actually lead to much less growth overall?
Well, it should lead to less growth simply because well, for a few reasons. One is just that, workers are a factor of production. And once you have less of a factor of production, the economy can't do as well. But the other reason even is that, younger people tend to consume more than older people. There's a long list of reasons that, China is in a very sticky position right now. And there's not an obvious there's no, it'd be lovely if you could say there's an easy way out, you just need to change this thing. But the problem is that these issues built over about a 30-year period. President Xi was, I think, wise to not just continue kicking the sort of property malinvestment down the road like prior leaders did. But there's many other things that he's doing that make kind of next to no sense from an economic perspective. And I think that he doesn't really think, I think he has that sort of more communist point of view where he doesn't think about the economy and economic growth. He thinks about the party and the sort of position of the party and that kind of thing. He's more of a politician than a kind of a leader of an economy. So.
Well, I wonder if this slowdown in China is going to have impacts on the rest of the world. What do you think?
Oh, I mean, it'll have huge impacts because we're talking about the second largest economy in the world, the global factory, because any countries like Australia and Canada that are exporting commodities, they'll feel that slowdown. But even just um, the tightening up on trade globally is very interesting. There's even if you think about it, over the last, we'll say, 30 years, there's been this explosion in globalization, where everything we own kind of came from all over, and the things got cheaper and cheaper and cheaper. And this was great. We had like a computer got cheaper and cheaper every year, cheaper and better. If we're in a situation where we're at the end of globalization or even deglobalization, that should be inflationary. Like that might be the real source of inflation in coming years.
Are we seeing the end of globalization, Patrick?
I think I think we are. I think that the trade tensions are getting higher. I think that actually, I even think it seems to me that the anger point right now seems to be around the export of Chinese EVs, because the auto industry is a big employer around the world, particularly United States and Europe. And they can't allow those jobs to disappear and just buy in all of these products that are sort of arriving cheaper than they can be made, because you end up with mass unemployment. And they are going to fight back against that, and China's likely to retaliate, and this builds and builds.
I don't understand the logic of of raising tariffs on Chinese-made EVs simply because you want to protect American car industry jobs. I mean, why not do the same with the Japanese? Why not do the same with the Germans or the British who
Well, they
export cars to
did,
here?
right? Like most,
Yeah.
you buy a Honda. In fact, a Japanese car bought in the United States probably has more American content than a Chevy or a
Oh,
Ford does.
yeah.
And this was a battle in the 1980s, and we're kind of revisiting it today. It's I also think that it's funny. I think there's a lot of national identity tied to automobile industries for some
Hmm.
reason, and more so than like no one's too upset when their camera or some other, their refrigerator comes from
Sure.
another country. But for some reason, it seems to wind people up. So.
Well, the next step then would have to be Chinese companies building factories in the US or Europe.
Well, we're already even seeing like
Yeah.
Chinese manufacturing in Mexico and so on, like ways of doing this, and even Chinese owned factories in places like Vietnam and so on in order to work around this. But the problem is that you can't have a situation where um, you can sort of only push things so far. And I think the problem is if you look at China, for example, they haven't actually increased the number of cars they're producing, right? They're producing around the same number of cars they were over the last few years. But because Chinese people are no longer buying new cars, they're getting pushed into export markets and they've been exported cheaply. Basically, manufacturers are willing to sell at break even or a loss, but that puts pressure on countries all around the world. So,
On globalization, do you think there's going to be a bifurcation of trading blocks? Perhaps we have America and its allies trading together, and then the BRICS countries trading amongst themselves, and less trading between the East and the West.
there is a little bit of that already, but the problem is that they all kind of make different stuff. Like that's one of the big flaws. Like the idea of BRICS kind of separating off as a sort of separate economy to Western economies. The problem with that is that all of the nations within that group are all running export driven economies, right? And so if they're all pushing stuff out and no one's buying anything in, you don't really have much trade, right? And so you actually do need consumers. And it seems that the real strength is with the consumers, right? Because um, yeah, if a refusal to purchase is very difficult to deal with, more so than maybe a refusal to supply. So.
Does David Ricardo's 19th century arguments for trade, which is to say countries operate on their comparative advantage, still apply today? I mean, back then we didn't have economies as diversified and as technologically advanced today. I mean, we could have countries making everything better than another country. I just wonder if the
So I'm a huge free trade person, and
yeah.
comparative advantage makes perfect sense. But the problem is that comparative advantage has to work in a world of free trade where there's two-way trade and so on. And so it's next to impossible to sell any American or foreign goods in China, and China's trying to push an awful lot of products. There's also not the original idea, I think how Ricardo explained the idea, he looked at trade between Portugal and the UK in cloth and wine, and basically said it made sense for Portugal to export wine to the UK and for the UK to export cloth to Portugal. But the problem is that when you have these sort of more command driven economies that refuse to import and want to export everything, whether they have an advantage or not, you end up with a breakdown of the system.
What happens when a country like China, for example, is accused of stealing technology from their trading partners to produce those things themselves cheaper and arguably even more efficiently? And they're trying to make not just a comparative advantage, but they're trying to gain an absolute advantage over all items. What happens to trade then?
Well, that is a big problem, and it's a funny thing because it's I think this definitely does happen. Like there was a very funny story. I forget, it was maybe 10 or 15 years ago that I think General Motors had a plan for a small car
Yeah,
and it got released in China before General Motors built their one because someone had basically stolen the plans and just started building
sure.
it. This stuff does happen. It's an accusation that was pointed at Japan as well in the 1980s. Um, it's a difficult thing because we all kind of agree or don't agree to the idea of copyright or patents, and it's a very Western idea where we kind of say like this guy came up with that thing, he gets to do it for X number of years before anyone can copy him. But that's a rule of sort of a cultural rule and a rule that basically everyone has to accept. And when if someone doesn't accept that rule, it's very difficult to deal with that. And it essentially means, that we possibly end up in a world with very limited protections of IP.
I am curious as to get it on your take on protectionism. Being a free trader, in theory, you should be against protectionist measures like tariffs and sanctions. But then what do we do with a country like China where they have been stealing IP and accused of using foreign technology to their own gain?
I think something does need to be done about this issue because it is a problem that has extended on. It's a very interesting thing because there's a few ways of looking at it. One is the pure Milton Friedman approach, which I think holds an awful lot of water. That if someone's going to sell you a product cheaper than you or they can manufacture it, you should happily buy it and almost just it's your win and it's their loss. But of course, in the long run, like when this drags on, for 20, 30, 40 years, you end up possibly losing the ability to make these products. And that's where a real problem exists. And I think that issue even was just highlighted with the outbreak of the war in Ukraine, combined with the problems, the problems moving goods during COVID, was that people, apart from even the idea of losing the ability to make this stuff, it was realized that many countries were, strategically disadvantaged by their inability to produce necessary goods or products that are needed to run their whole supply chains. Like at the moment, one of the advantages that China has above the West relates to critical minerals, rare earth materials, that sort of thing, which are not actually rare, but they are only manufactured in China, and even a lot of like battery components and so on. The way that China can and likely will in coming years squeeze Western nations during trade conflicts are to cut off supply of some of these products, which are very much needed. I was speaking with someone a while ago who finances some of the um, kind of infrastructure projects, who told me that one of the big problems is that there was, I forget, there was a plan to build, a mine for some sort of critical materials in the United States. And the financing was all being lined up for this. And, the Chinese suppliers at the time just absolutely bottomed out the price on the end material. And of course, no one's going to finance a factory that produces goods at a loss. And so straight away, the plans or it wasn't a factory, it was a mine, but the plans for that mining operation were torn up because it made no sense. And so, in the coming years, we will see more problems, I think, around rare earth materials, critical minerals, that kind of thing.
Speaking of wars, you mentioned trade wars. What about currency wars? Let's take a look at my screen here at a recent news article coming out of the end of August. China state banks buying dollars amid rapid yuan gains. So major state-owned banks were buying dollars in China's onshore foreign exchange market on Friday to slow down a rising yuan. The bank's actions come as the yuan strengthened to an 8-month high of 7.0895 per dollar. China's state banks usually act on behalf of the central bank and the country's foreign exchange market. Reuters reported last week that Chinese authorities have worked behind the scenes to ensure the currency does not spike abruptly. Can we expect further, or an escalation of currency wars, which is to say everybody wants to race to the bottom?
Yeah, I mean, all of these things are interrelated. There's a fellow named Brad Setzer who's awfully interesting on this, and he points out that in recent years, all of the big banks in China are state-owned banks, and so you might look at it and say, oh well, the Chinese central bank is no longer buying dollar-denominated bonds or dollar assets, but then you see a huge explosion in these dollar assets within these state-owned banks, and it's just a way of doing the same thing, but hiding it in the balance sheet of a bank rather than a more public government balance sheet, and so yeah, I mean, we see these things and we will continue to see. When you look at kind of how transfers within an economy work, it's kind of an interesting thing. Like if you wanted to, like the Chinese government, for example, they do a very similar thing to the window guidance that the Japanese used to do in the 1980s, which is essentially to lend to different companies or different sectors at different interest rates. And so if China wants to subsidize the steel industry, for example, without sort of writing a direct check to steel manufacturers, all they have to do is reduce the interest rate on their loans, reduce the cost of electricity supplied to them, a whole bunch of things, even just reducing the protections to workers and things like that. And that means that business is able to run with bottomed out costs that a business abroad wouldn't run at, and that doesn't sort of run afoul of any of the sort of World Trade Organization requirements. So
We talked about the declining fertility rates in China, but that's actually not a Chinese phenomenon. It's a global phenomenon. It's happening
yeah.
in most developed and to some extent some developing countries as well. India, for example, has started to see even their population growth has started to decline. What do we do about that from the productivity side? How do we maintain productivity growth with a smaller population?
The replacement for workers is usually machines, technology, that kind of thing. And whenever you see a huge boost in productivity, you see it like during the Industrial Revolution, where a man with a machine can make more stuff than a man without a machine, and that kind of thing. So, mechanization, computerization, that kind of thing can help. That is likely to help more in countries that are a little bit behind. Like you're going to do way more with automation in a place like India. It's not going to do as much in the United States because things are already reasonably automated in the United States. Um, my friend Manoj Pradhan wrote a really good book about, I don't know, it's probably about two. In fact, I think it came out even maybe around during the COVID, but it's by Pradhan and Goodhart. And they argued that these, population dynamics were likely to be inflationary because essentially more if you have more older, less productive people in an economy, you have the same number of people consuming because we all eat and require the same, sort of clothing, food, and goods, but you have fewer people working. And that just means that the goods being produced have to become more expensive. And so Manoj was one of the first people to really argue about coming inflation, and he didn't make the argument based on any of the kind of the big COVID issues. It was just much more of a population dynamic issue, and his belief is that in the long run, with this aging of society all around the world, that in its own is inflationary, and his argument makes an awful lot of sense.
Well, do you agree that we are going to get higher inflation regardless?
Yeah, I think it's likely, but we're also coming out of a period of unusually low inflation and unusually low interest rates. It amuses me. Like, I guess if you're my age and all, even people my age in markets have really never seen rising interest rates. Interest rates have come straight down since 1981, with a couple of bumps upwards. But, the world isn't really, doesn't really understand that zero is not the natural rate of interest. Like that was sort of that's the patient on a heart machine,
Yeah.
at the hospital. And that made a lot of sense probably during the pandemic, and all of the crazy loans that were made and so on were designed to sort of leap the economy across this chasm of that occurred. But now we're kind of the last few years we've been paying back that debt. But then in the long run, assuming a reasonably healthy economy, our long run expectation should be higher interest rates. The idea that we'll go back to sort of a zero interest rate where you can borrow, a mortgage loan at 3.5%, that's not a very reasonable long term expectation, in my opinion.
In 1981, it was double digit interest rates for the 10-year yield in the US, for example.
Yeah,
We're
yeah.
not,
People got mortgages at 20% back
are we
then.
going to see that again, you think?
No, I don't think so, because we don't have the problems that there were back then. But the long run, if you look at 100 years of interest rates, or of mortgage rates, you see an average rate of around 7 to 8%, which was kind of where we were this time last year when everyone was in a panic that mortgage rates were shockingly high. But I bought my first home in, when was it, in 2001, right before September 11th, actually. And I worried a lot that I had just closed my mortgage, and that happened. Um, and I think I had an 8.5% interest rate. A year later, I refinanced it at like 4% or something like that, because rates came down so fast. But, at the time, 8.5% seemed like a reasonable interest rate. So,
On the European Union, what do you think should be done about the EU? Is that a system that should change, or we should keep? One argument against the EU is that countries cannot comfortably exercise their own monetary policies because of the central bank that is governed by the European Union.
yeah.
That creates problems. But is that a problem that we can overcome with another solution besides breaking it up?
I, you know, I think that is a problem that we'll see again. And, there's a number of solutions, but the thing is that people in Europe like to think that the EU is kind of, or at least the really pro-Europe people like to think of the EU as being like the United States with, a whole bunch of states, but as one overall country. But of course, whenever there is stress within Europe, they hate seeing transfers between the countries, because of course the country is sending out the transfer gets upset about that. There isn't really the fact that there isn't sort of like an overall interest rate for the EU, and a whole bunch of different interest rates and different borrowing leads to problems, and I think it will lead to problems again in the future. I think there's just it is naturally an unstable thing. So the solution is to either tighten it up and sort of move towards the idea of the EU borrowing as a whole, or I think we will forever see tensions as various countries run into problems. So.
Well, thank you. We covered a lot of ground today, Patrick. I appreciate it. People can follow you in a number of places. I mentioned you have a YouTube channel, so I can't close off the conversation without mentioning that again. Congratulations on your success there. And what I as a fellow YouTuber, I'm just curious to get your take before we go on the changing media landscape, and what you with your work. Your objective with your channel, and perhaps some of the problems you see with mainstream media that you plan to fix, if any.
Well, I think YouTube is really interesting in that, it's almost, in a way, it's like running a little television station out of your house. Like anyone with an iPhone can kind of
Sure.
do this. While, of course, in my childhood, that was not how it worked. You had to be picked and you had to work your way up. And, now anyone can do this. And there's, of course, pros and cons to that. I think more pros than cons. Um, but the benefit of it is that there is a type of really smart and interesting material that you'll find on YouTube that would never have made it onto TV or in traditional media. The biggest problem, I think, with it is possibly just that risk that we all end up in bubbles. Like where if I only follow people who share my opinions, I just keep doubling down, and I don't recognize maybe mistakes I'm making, or so I think, but equally, I would then argue that younger people who've sort of grown up in this new media landscape, they do recognize that. It's more when you think of people who get trapped in these weird bubbles of conspiracy theories and so on. I often find it's sort of the elderly that are more likely to do that than young people, maybe.
Well,
So.
you get a lot of views on your channel. Again, I encourage people to check out Patrick Boyle's channel. What do you think has made you popular? What kinds of messages or the way you present your information has appealed to people?
Well, I think it's sort of hopefully I try to put out a high quality financial content, but also making it more palatable. Like often, you speak to people in sort of simple language
Hmm.
and maybe also make it a little bit entertaining. Like, it doesn't hurt to throw a joke or two in. And what works, gosh, I don't always know, like, because to a certain
Well,
extent,
I'm
I
I'm
sometimes
curious as
just
to
feel
how
lucky.
you. Yeah, well, that there's an element of luck. How do you gain people's trust? How do we know that when we're watching a Patrick Boyle video, for example, I'm just using your channel as an example, that I'm not getting misinformation or conspiracy theories or fake news or anything of that sort?
It's hard to know, but I think my goal with the channel is to put out stuff that I would argue actually a way of growing on YouTube is just there's a lot of people and they say I have to put out a type of content that seems to be getting lots of views, and they'll pick another channel and try and do a version of that. I would argue that if I find something interesting, there's a good chance my audience will find it interesting. And there's so many people with access to YouTube that you don't have to make a product that appeals to everyone. You just have to, and I think if you stay true to yourself and you come out with content that you went, wow, that's interesting, and I hadn't thought of it that way, and I'll tell the people, what I've learned and what I think is going on, and I think if you try to be honest, like you don't have to be a know-it-all. You can admit that that these are ideas that you think are interesting. You might be right, you might be wrong, and I think people respect that. A while ago, I forget, someone mentioned someone to me, and I looked up their YouTube channel, and it was this sort of very angry ranting kind of a channel where the guy in question was so sure that he was definitely right and that everyone else was an idiot. And it's like, well, what are the odds that everyone who disagrees with you is an utter
There,
idiot,
there's a lot of fake financial influencers out there. That's the downside of social media having risen and the downside of having access to the internet. Anybody can broadcast. Um,
Yeah.
and how do we screen for that? How does the average person who may not be as knowledgeable about finance and economics as you differentiate between, a fake influencer and somebody who actually knows their stuff?
Well, sometimes like the real worry is the kind of people who are out to scam you, like where they're basically, we'll say pumping and dumping a stock. So I'd be very wary of anyone saying you have to invest in and they give you a portfolio of things that you should buy, in particular if it's obvious that they benefit from, if they are trying to push, penny stocks and things like that. But even in terms of the people who are YouTubers who teach finance who maybe don't have a huge background in finance, I think that's still okay because the audience that come to them are people who don't know that much either. And if someone's going to tell you kind of simple things like you need to, pay off your credit card debt before you do this and that, or, like kind of simple ideas like that, that's right for certain people. Like that's the first information they need. And I don't really pitch my channel towards sort of absolute beginners. I kind of, you probably do need a bit of a background in finance to understand what I'm talking about. And I think as long as that person is sort of a decent and honest person and they're not sort of, I think there are some giveaways when someone is kind of
Sure.
flashing all the wealth they have and then telling
Sure.
you can sign up for their trading course at $2,000 a week. And it's like, well, if you can go to a
Yeah.
university for less than that,
Yeah.
this is a problem. But if someone is giving their opinion and sort of telling you what they've learned about finance,
Mhm.
and that can be useful to a lot of people. So
Where else can we find you, Patrick, besides your YouTube channel?
yeah, I mean, I'm kind of on a lot of the social media, mostly YouTube though. I'm on YouTube, I'm on Twitter, I think
Okay.
I'm on Instagram as well now.
All right.
But yeah, YouTube is really the place.
I will put the links down below, so make sure to follow Patrick Boyle down below. Thank you very much, Patrick. I appreciate it.
Thank
Uh,
you. It's been a lot of fun.
Welcome to the program, and I look forward to speaking with you again soon. And thank you for watching. Don't forget to like and subscribe and follow Patrick in the links down below.